Even if you have money, there's nothing to buy. This is the new problem facing the American people. Amidst the trade war and Trump's constantly shifting policies, Americans no longer have to worry about inflation, about rising prices, or about not having enough money to buy things, because the tariffs the US has imposed on China are extremely high, like really high. Now, regular retail stores are coming out and complaining that they simply can't afford to import goods anymore. There's nothing left to put on the shelves to sell. This has become a new crisis, the so-called empty shelf crisis. Anything is possible, right? If it's Trump, the shelves are empty with nothing left to buy. Even Bank of America has come out and said that. Even if Trump were to reverse the trade tariffs now, even if he showed signs of wanting to make a U-turn, it's already too late, because the fundamental economic indicators in the US are already in bad shape across the board. Even the Federal Reserve Board, the US central bank, has formally published and released a report stating that there are several vulnerable areas in the US economy that are at risk of collapsing. You can support the Psy Money Monster channel by scanning this QR code. As always, this clip is packed with solid, detailed information. Or you can support the Psy channel by hitting subscribe. For those who already subscribed from previous videos, thank you so much. No need to hit it again. We know you love us and we love you too. But if you haven't yet, don't be mad. Just support us a little by hitting that button once. Bad. Executives from major department stores, especially those that sell everyday consumer goods in the United States, have come out and complained that if Donald Trump continues to pursue such high protectionist trade tariffs against other countries, especially China, then Americans won't have to worry anymore about inflation or about things getting too expensive to afford, because they simply won't be able to buy anything at all. Because these stores say they simply can't afford to import goods to put on their shelves anymore, which would lead to a new crisis, an empty shelf crisis, where the shelves are bare and there's nothing left to buy. One of the leading retailers of consumer goods, whose products most Americans rely on for daily life, things like tissues, electronics, light bulbs for the home, all the essentials, came out and said this directly. 60% of the products sold at Walmart are imported from China, with the import value exceeding $100 billion. If Donald Trump says he's going to impose a 45% tariff to block trade with China, Walmart says, that's enough. We just can't afford to import at that level anymore, and our customers can't afford to buy either. The impact of Donald Trump's trade tariffs is clear and direct. It happened immediately, as you can see from this chart. This chart shows that the number of containers from China arriving in the United States dropped very sharply in April, and it looks like it will keep dropping. This means that not having enough money to buy things is no longer the issue. Even if you have money, if it's not enough, you still can't afford to buy even basic household items. And if Donald Trump still doesn't, remove these trade barrier tariffs, which we don't even know how much they need to be reduced by. It's not just that things are getting more expensive, but now there's actually a shortage of goods. And the longer these shortages last, the more expensive things will get. Prices just keep going up. Now, let's talk about how Donald Trump's trade war policies have affected consumer sentiment in the United States. Let's take a look at this chart, the Consumer Sentiment Index. It shows that consumer confidence in the U.S. market has plummeted. Right now, it's dropped down to just a little over 20. Honestly, it's a blessing it hasn't gone negative. The reason it's like this is because medium to long-term inflation expectations, that is, over the next 5 to 10 years, are expected to be high. It's gone up to more than double the target, likely reaching 4.4%. What this number means is that anything that's already expensive is just going to get even more expensive. Right now, Donald Trump's policy, which claims it will bring manufacturing back to the US and fix the US government's budget deficit, hasn't actually solved anything. There's no sign that anything is going to be fixed. Looking at the US government's budget deficit since the start of the fiscal year in October 2024 and counting up to 5 months in, the U.S. government has already run a budget deficit of $1.15 trillion. If you break that down just for fun, it means that under Donald Trump's administration, the US government is running a budget deficit of $8 billion a day, which is 17% higher than the same period last year. And the bigger the budget deficit, the more the government has to borrow. The more they borrow, the higher the debt. And with higher debt comes a heavier interest burden. The US government has to pay more and more interest every year. In 2024, just the interest payments alone that the US government has to make will reach as high as $882 billion. And in 2025, according to data from the first 5 months of the fiscal year, the interest payments the US government will have to make have already reached $396 billion, which is $46 billion more than the same period last year. Not only is the debt increasing, but not only is the debt high, but the interest payments are also huge. Right now, the value of the US dollar has dropped significantly as well. Ever since Donald Trump won the election, now it's almost the 100-day anniversary of Trump's second term, the value of the dollar has fallen by 9.2%. Such a big drop in the dollar doesn't just mean the US economy isn't doing well, though that's part of it. The dollar is a leading indicator, so this is confidence in the US dollar has dropped, and that's due to both the economy and US political policies. Now, is it an exaggeration to say that what the US fears most is China? Honestly, it's not an exaggeration at all, because if the dollar, it has become less trustworthy. So which currency could replace the dollar? But if you ask directly whether the Chinese yuan could immediately replace the dollar, looking at the numbers right now, the answer is no. It's still very far from being able to do that. If you look at this chart, which shows the proportion of different currencies used in the SWIFT system, you'll see that the US dollar, according to data from April 2nd, 2025, accounts for more than 81% of usage in the SWIFT system. Meanwhile, the yuan, which some people say could replace the dollar, only accounts for about 7.38% of usage in the SWIFT system. Just 7 compared to 81. That's a huge difference. It's nowhere near close enough to be able to replace the dollar, right? But let's look at its growth. If we go back and look at the same set of data, the proportion of different currencies used in the SWIFT system in April, in 2024, which is just 1 year ago, the US dollar was used in the SWIFT system at a proportion of 84.13%. As for the yuan, it was used at only 5.2%. What does this mean? Do you see the growth? This means that the proportion of dollar usage in the SWIFT system has decreased. It dropped by 3%. While the yuan share in the SWIFT system is still small, it has grown significantly. It's grown a lot compared to 1 year ago, up to 10%. As for the US stock market, right now it's in bad shape. It dropped from its peak back in February, hitting a low of minus 19%. But when Donald Trump announced a 90-day pause, the market rebounded a bit, so now it's only down 10%. Still, it's not looking good. Michael Hartnett, an investment strategist at Bank of America, commented that the US market's rebound after Trump paused the tariffs doesn't mean that the US stock market has become less volatile. More importantly, US stocks are still very expensive right now. So there's still a possibility that US stocks could drop even further. That means the rebound in US stocks after Donald Trump's pause isn't a buying opportunity. It's a selling point. That's what Bank of America is saying. Even if Trump pauses, makes a U-turn, or backs down, it's like the bullet has already been fired. You can't take it back now. The economy just isn't doing well anymore. Right now, the US dollar and the stock market are moving in the same direction. When stocks drop sharply, the dollar also drops sharply. When stocks rebound a little, the dollar bounces back a bit too. So if Michael Hartnett's analysis is correct and US stocks have a chance to fall even further, that means the dollar could also drop along with US stocks. That's why the dollar could weaken a lot, and the price of gold could still have room to go up. And it's not just investment strategists from Bank of America who are saying that there are hidden bubbles in the US market, with many of them ready to burst. Even gurus and many investment analysts are speaking in the same direction. But I'm not going to just take each analyst's words and put them all together for you because there are just too many. However, there is one institution that I absolutely have to mention, and that is the official report dated April 2nd, 2025 from the Federal Reserve, which is the central banking system of the United States, is about financial stability. In the latest update on April 2nd, 2025, the Fed reported in a very direct and detailed manner about the risks in the U.S. economy. Let's take a look at this table, a comprehensive overview of financial system vulnerability. This is an overview of financial vulnerabilities in the U.S. economy. Here, the Fed sees several areas of risk. The most notable and seemingly riskiest area is the capital market, or investments in the stock market. The Fed specifically wrote in the report that even though stocks have come down, they are still expensive. As for bond investments, liquidity is quite low. Importantly, there are several bonds that are coming due for repayment within the next year or two. There is a tendency for interest rates to remain high. So if companies have debts coming due during a period when interest rates are still elevated, there's a good chance they won't be able to issue new bonds easily, and the risk of defaults or failing to repay their debts is very high. Another area of concern is leverage. This is particularly worrying because right now, various hedge funds are using very high leverage at the highest level since 2013. Leverage basically means borrowing money to invest. Leverage can range from just 1 time, 2 times, 3 times, even up to 10 times or 100 times. Investing with leverage means you only have a certain amount of your own money, but you multiply it by however much you leverage. If you make a profit, you gain according to the multiple you used. But if you lose big. Your losses are multiplied by the same amount. So right now, the risk is that leverage is extremely high, and there's a chance that you'll lose more than you gain. And all of this that I've just mentioned, well, it means that the US economy isn't as good as Donald Trump intended, or maybe he actually meant for it to be like this, or maybe this is his plan, who knows? But anyway, right now, Donald Trump seems to be softening his stance a bit. He even gave an interview to the media saying that the tariffs imposed on China aren't going to stay this high forever, they'll eventually go down. He's making such a big show of it, it's like he's already got the U-turn signal on. So now we just have to wait and see when China will agree to negotiate, if they'll come at all. Let's just say, hypothetically, that one day China decides to negotiate and is actually interested, and they both let bygones be bygones regarding trade disputes. Then the US and China could shake hands and make up, and globalization would return to how it was before. If that happens, stocks would likely bounce back, and the economy would have a happy ending. But can that actually happen? Anything's possible, especially with Trump. If it happens, not just on Psy Money Monster, but most global media have reported things like America attacking China or the US ending trade relations. But if they actually make up, the economy would recover. And we're telling you, yeah. Let them make up, though we've already reported it that way. I'll even eat dog food if they do.